Good afternoon, everyone. My name is Catherine Herring, and I'm here from Florida Literacy Coalition. And welcome to our webinar on the importance of being banked. Before we begin, I just want to thank Nicole, my coworker, for helping organize the webinar, and also Dr. Gutter and Taylor for presenting. To give everyone a little background for anyone who's unfamiliar, the Florida Literacy Coalition has been in Florida and active now since 1985, and our sole purpose here is to promote and support and advocate for adult and family literacy services throughout the whole state. As an umbrella organization, we do support more than 300 adult education literacy, family literacy providers throughout Florida. So there's a broad reach and great opportunity for networking and sharing of resources and other opportunities. And without further ado, I'm going to go ahead and introduce Dr. Gutter from the University of Florida. He's the Associate Dean from the UF's Extension Programs. He's the State Program Leader for the 4-H Youth Programs, Families and Communities through the Institute of Food and Agricultural Sciences at UF. His expertise and background is in family financial management and the family resource management services. And his research is focused on examining how the socioeconomic status, financial education, personal psychology, and financial socialization relates to your financial behaviors. So we're going to have some great insights today. So with that, Dr. Gutter, I'm going to go ahead and turn things over to you.
Okay. Hopefully you guys are seeing all the right stuff. Oh, looks like it. That's a good sign. So one of my friends here who's watching this presentation made sure I could see that. So very grateful for it. My name's Mike Gutter, and just from a show, for those of you, are any of you familiar with cooperative extension in your counties or in your areas? Any of you familiar with extension? So feel free to raise your hand or type it into the chat box. Well, so extension, for those of you who aren't familiar, right, is part of the land grant system. So every state has a land grant university, and in Florida, of course, that is the University of Florida, as well as our 1890, which is FAMU. So two schools that were set up with specific missions to take the expertise of the university researchers out to the people of Florida. And in particular, right, we do that through cooperative extension. And so each of our offices, each of our counties, I should say, all 67 counties have at least one cooperative extension office where they're doing programming from helping people in agriculture to helping families manage their money to teaching people about the importance of good nutrition and even helping promote access to fresh fruits and vegetables. So I wanted to point that out to just kind of set the stage a little bit for where we come at this from. As was mentioned, I'm sort of an economist for my training, so that's where I start off at. And so today we're going to talk a little bit about one of these core behaviors that some of us take so much for granted we can't envision that there's people that are falling by the wayside in this. And so this is really about what we call the importance of being banked itself. And so the first kind of thing that we want to think about with this is, what does it mean, right, to be banked? So what does it mean that you're banked? Or more importantly, what does it mean that you're unbanked? So feel free to put that in the chat window. What in your minds does that mean, to be unbanked? Well, one of the things that we often think about, and the way the FDIC and Federal Reserve often define this term, is really the notion that people have at least one bank account, right? And when we think about being banked or being unbanked, it's really not something as simple as flipping a switch. In fact, we have a whole huge proportion of the Florida population that's actually called underbanked. And these are people that may have a bank account, but for any number of reasons can't use it. And so we'll talk a little bit about this then, right? So looking at Florida in particular, right, there are in the U.S., we had $58.3 billion in check cashing transactions in 2010. And this has grown, right, from 10 billion in 2001 then to nearly 30 billion when we look at just the payday lending side of things. So how many of you are familiar or know someone who's used these types of services before? So show of hands. So this becomes a somewhat common thing as we kind of look to the notion of how much people have this and where they are. And in fact, we look at the Florida populations, and we're approaching about 20% of the population that's in here, right? 17 million are unbanked, which means that they actually don't have a checking or a savings account in any mainstream facility. But we have 43 million people who have a bank account but still use things like check cashing and payday lenders. Now, people often say, well, why is that happening? We're going to talk about that in just about a minute as we kind of look at who these people are. But let's look a little bit more about what Florida looks like. So this is the great state of Florida, right? So taking a look here, hopefully, while we don't put all the county names in here because it can get a little ugly to try and see that small text, hopefully you all are pretty familiar with where your counties are situated. So take a look and see where you're at, right? When we look in Florida, as I mentioned, 6.2% of our Floridians, now mind you, that's almost out of 18 million people, so almost no number is small in Florida when we talk about it in that perspective. 6.2% of people don't have any type of bank account. And roughly 19.1% have a bank account but can't really use it. Now, a lot of this is because if they have bounced too many checks, for example, in the bank account, they're in the negative. So any money that goes into that bank account goes towards the restitution of the amount that they're overdrawn. So if someone gets a paycheck and puts that in the bank when they are in the red, then they're not going to have any of that money to actually pay their current bills, to buy food for their children. And so you'll find people that are in precarious situations with their bank. They may not close their bank account, but they're probably moving a lot of their financial transactions now over to check cashing places. And likewise, if they can't, for example, if they can't use their checking account because they're overdrawn and they're underbanked, then not only are they paying check cashing fees, but they're probably paying things like fees for money orders or potentially using credit or any number of other challenges. So when we add these two together, right, 25.3% or roughly a quarter of Florida's population is unbanked or underbanked. So my first question that I always like to get people to think about is, that's 1 in 4 Floridians. And that's Floridians, so we're not talking about families or households here as we're linking that together. But let that etch in for a moment, right? That's 25% of people that really can't use or are in a position now where they shouldn't use, by any number of reasons, a mainstream bank account. Now think of all the things that limits someone to when they can't use a mainstream bank account, right? It makes paying bills that much more challenging. It makes getting money from people that much more challenging. It makes keeping track of your money, the safety of your money. All of those things become there, plus you pay for each transaction you make. Each time you simply want to cash a check from money you received, you would pay a fee at an alternative financial sector. So there's many different types of places. So who's unbanked? Well, we have these statistics, which again are from the Federal Reserve Board of Atlanta. They're pretty reflective in many ways of what we see in Florida as well. So Florida fits this profile. And that is, so households that are more likely to be unbanked than the overall population as a whole, right? So they have a greater likelihood of being unbanked is the best way to put this, is, oftentimes we would certainly say, unfortunately, our minority households are commonly a common statistic here. African American, Hispanic non-black, American Indian, Alaskan householders, households where Spanish is the only language spoken at home, or with a householder that's a foreign-born non-citizen. And we can talk about why some of these are the case. In many cases, right, depending upon where they're from, we know that many other countries don't necessarily have a lot of the safeguards that our financial sector have. And so we always say, you may not think our system is perfect, mind you, so I'm not suggesting that we have a perfect system, But what I'm suggesting is that our system is far safer for consumers to participate in than in many other countries in terms of making sure your money will actually be there, that it won't be absconded with, that there's protections from over-lending. For example, FDIC insurance in the U.S. helps to provide some safeguards. So those are some of the common things we see. We also know that families with an unmarried female or male family householder, so in other words, single-parent families, which in case we also to remind us that that's the most common family type right now in the U.S. is single-parent households, but they are more likely to be unbanked and also underbanked. People earning less than $30,000 a year, while that's certainly lower income, we would also say that, you know, that's enough money that someone could be banked, is kind of the idea, that that's not so far below, but yet we know there's challenges. With a householder holding less than a high school degree or with a householder under the age of 45. So these are all characteristics that are associated with an increased likelihood that someone is underbanked or unbanked. Now that's meaningful, right, because it helps us to understand the audience as we're talking to families, as we're talking to individuals, as we might be working with people one-on-one or even in large classroom settings. It does help us to understand sort of some of the challenges are and trying to get a sense of why some of these things are the way they are. And again, a lot of it has to do with issues related to access. For example, if you go into some rural communities or some limited resource family communities, you will probably see pawn shops. You will probably see check cashing places, even though legally they're not supposed to be zoned targeting particular audiences, but we do often see that. But you may not see nearly as many mainstream commercial banks and credit unions in those same areas. Well, just like our food deserts and our healthcare deserts, we certainly have some paucity of financial services in certain areas. And the sheer ability that I would have to drive 10 miles to get to a bank in many cases means I am far more likely to go to the check cashing place around the corner, especially if I'm a single parent with kids in tow. I'm going to want to do the fastest thing in many cases. So it's not that we necessarily judge or can't understand why people are making these choices in some cases. And that's kind of one of the things to talk about. It's the old economist lesson. People can rationally be choosing a lot of different things there. It doesn't mean we agree with their choices. So we may not like that people are choosing this. We may think that there's a lot of disadvantages, but many people who might be choosing this are also in a survival mode, and they can't really think right now about longer term issues. So I wanted to just kind of set that stage a little bit more by painting some of the statistics here. Let's think a little bit about the cost of this, though, because I know in our minds we say, well, some people are rationally choosing this, maybe this is okay. But having worked with a lot of families, and I've got Taylor here next to me, and so we've worked with a lot of families, both in our extension offices as well as individually, who have used some of these services, the cost associated with them is oftentimes unpredicted or unanticipated. For example, with the payday loan, you might only be charged $20 for 2 weeks to borrow $200. Now, you may think that's okay, except if you don't pay it back in 2 weeks, they roll it over, you get another 2 weeks, but they also charge you now another $40. So now you've been charged $40 to borrow $200, still really for a 2-week period. And so you can see how, for example, in a class action lawsuit we were working on about a decade ago, just starting with these, we saw interest rates at 500, 600, 700% if you actually annualized what that interest would be charged for $20 for $200 for 2 days. And the average consumer who uses these rolls them over, right? That's that process of saying, oh, give me another 2 weeks, here's another 20 bucks, I'll do that 6 times. So think about that for a moment. On average, someone was spending $180 to borrow $200. Even though they really needed it just for the 2-week period, they spread the loan out maybe over 2 to 3 months. But while they're not being charged interest daily, these fees add up quite a bit. And if you think of them as an interest or financing charge, the APRs are quite unconscionable. So with respect to that, right, we have these main alternative financial services that families use. There's check cashing facilities, right, where you might spend as much as 10% to get your check cashed. This could even be a payroll check. There's money transfer fees that you might be needing, whether it's to transfer money abroad to family, whether it's potentially to simply transfer money to people that you owe it to, the different types of transactions. And then, of course, there's payday loans, which are those small value, short duration loans that many people have to borrow when they call times of emergency. And incidentally, just from my own standpoint, I always say this time of year, Please note that I don't consider holiday shopping a time of emergency for payday loans, even though I know it'll feel that way to families. I grew up in a household where we didn't have money many instances and often had to go without, and I can recall quite a few holiday seasons where we were told holiday gifts would be a couple weeks late this year because of payday, because of things like that. It's not easy for kids, and it's not easy for parents either, but we do want to try and make sure that families, try and make the best decisions possible. So with traditional financial institutions, right, we have these monthly checking account fees in some cases, depending upon the balance you have. Sometimes those can be waived. There's NSF charges, or non-sufficient funds fees. So this is what's happening if we mismanage our account or if we overspend the account, we're going to be charged fees. And that can certainly be prohibitive or intimidating to families who are unbanked or underbanked. There can be overdraft protection, which can be a good and a bad thing. Certainly, right, if it's a one-time occurrence and you have it, it's great that it bails you out and saves you fees. But we know some people, for example, right, we talked about the restitution issue. Some people will go into the red and stay in the red for quite a long time, never really quite ever getting far above the zero mark. And so that's kind of a concern too, because it doesn't help people to build up a base and build up resources for their family. So that's a little bit of thinking about this. Let's maybe get a little specific if we could, though, because I think it helps to really see these. I know some of you may not sleep, eat and breathe some of these numbers, but this is, Taylor and I look at these all the time. So just take a peek for a moment, right? If you've never looked at this AmScot check cashing fee board, just take a peek for a moment here. This is from August 14th, 2014, I believe, so it's a little older, but I'd still say that they haven't gotten super friendlier in terms of what they're charging for this. So if we just look at, right, what the fee would be, so just to borrow from $1 to $80, right, it's $3. But let's look at that $1,000 or higher, right, it's going to be a 2% fee, right? At $980, it was going to be, $14.95. So up until that $1,000, right, it's a quoted dollar fee, and after that it's a percent fee. So when we start looking at that, remember I said that $1,000 at 2% is how much? $20.
And this one, just to clarify a bit, if you have a computer-generated local payroll check, that's the rates on the far right. So if you have this computer-generated payroll, you're looking at a max of 2%. Off to the left, you can see all other payroll and handwritten checks are at 4.5%. So a big shift there. If you have either smaller businesses or any employer who isn't computer-generating those payroll checks, you're at almost 5% just to get your own money from working.
That's right. And if we think of some of the families we have that might not be working in full-time jobs, everything from migrant labor on above, there can be a lot of might be some checks being written, some personal checks, lots of different things like that. So imagine for a moment, right, that just to get to your paycheck, you have to pay a 10% fee just to cash what might be a $200 paycheck. That can be overwhelming to individuals and families. And yet, right, they still might believe that it's better to do that than to take some of the risks associated with the accountability of the bank accounts. We certainly know some families fear the level of documentation that might be associated with these, but that's oftentimes a little bit of a misperception in terms of how different information is shared and, more importantly, not shared when it comes to these accounts. So there's a lot of things there. But we wanted to make sure everyone had actually seen this, because a chart like this is not something that's often advertised by these companies, but we think it's really important that you get a sense of this, because think for a moment, how much do you pay to cash for your payroll check at your bank, assuming that you actually get a check and it's not just direct deposited. And in fact, for most of us, if we do direct deposit, our bank will waive our checking account fees because we're cutting down on their administrative overhead. So there's many things like this, right, that in a mainstream bank we sort of don't even consider cashing a check to be a burden or an expense, yet it is an expense for others. So here's a neat example, right? Living in Florida and need money fast? Let us be the first to say yes. Well, isn't that great, right? So borrow up to $100 for a $14 finance charge. The total payment due is $114.99. So how much is that? Well, that's an annual percentage rate of 390.8%. Or let's just round that up to 391. What the heck? Let me ask you, how many of you would sign up for any loan for any purpose that charged 300%, almost 400% APR? Think about that for a moment, right? The average APR on a credit card is about 23%. Now think of 23% for mainstream credit cards versus almost 400% APR on this type of loan. So the cost of debt isn't even close. And this creates a major disparity for families who are trying to improve their lots in life. So yeah, hopefully some of you, your jaws dropped, because I know when I see things like this, I kind of get a little bit little caught up and choked up about it. So let's just talk about what's a year of fees going to cost us here. 26 paychecks, right? $32,000 a year annual salary, $1,200. I'm going to be paying 2% each time to cash that check, assuming it's a computer-generated payroll check. So that's $643.80. Now I've got to pay some other fees associated with bill pay, that are going to be there. So I'm going to have to write some money orders. Those are going to have some fees associated with them. That's $150. And then I've got a few payday loans that I'm going to need throughout the year, right? Some of us might have used a credit card, some of us might have used personal savings, but in lieu of neither of those, others may have to use something like a payday loan for that rainy day or smoothing over funds. So looking at that for a moment, my goodness, right? This is, as we're looking at sort of the fees and how these add up, right? We're at $800, we're at about $1,200 now a year. So think about that for a moment. This person, right, their bi-monthly salary, sorry, is $1,200. So basically they're giving up one entire paycheck just for fees and transaction costs to use the rest of the money they receive every year. That's right. I would not want to do that, right? I would not want any family to be sacrificing that much funds. And remember, the audience that we're talking about, this is an audience, right, whose average income was lower, right? We had a lot of single-parent families in here, and imagine the fact that they're potentially paying this much in expenses on an annual basis for just using their money to manage their family's needs. So why is this the case, right? So this kind of gets to be the nitty-gritty, the barriers to traditional banking, as we call it. And bear in mind, I know we've used the word banking a lot, and please note, we refer to credit unions and banks. We could call them mainstream financial institutions, but that really is a mouthful. So we're using banks for shorthand, but please know this goes for credit unions as well. But some of the barriers then to traditional banking and credit unioning, if you will, really are, number one, check systems activities. So this is always one that kind of gets people surprised, because I always find, at least in a few presentations, people have no idea what check systems is. So I'm having trouble seeing everybody's raising their hands, but let me just ask some of you, how many of you have ever read your check systems report? So raise your hands or type it in the chat window. Okay, so these check systems reports are very much like your credit report.
Do people haven't heard it?
Haven't.
Yeah.
So check systems reports, right, are very familiar with, and you're probably more familiar with things like your credit report, right? So the credit report, as you know, keeps track of how you're borrowing, whether or not you're paying your bills on time, things like that. The check systems report is like a credit report, only for your checking account. So, right, if you've had a lot of mismanagement, which would be evidenced by things like failure to pay bills, or lots of things like overdrafts that you're having, bounced checks, for example, how long you're in the negative for if you're in the negative. So these factors, right, affect your check systems report. And check systems is one of those reports, right, that will assess whether or not a bank or credit union wants to do business with you. Clearly, someone might have been guilty of fraud. That's very different here. I mean, fraud is a purposeful and intentional act, certainly an illegal one. The things we're talking about are potentially just bad management skills, potentially because someone's not familiar with it. They don't know how to do it. No one ever showed them how, right? This is not something that's taught in a lot of schools anymore, so many people just have never really been taught how to balance a checking account or how to balance a budget, for that matter. We can help with that, as we've said, but again, a lot of times it's something that people are lost on. So that's going to happen. There is definitely some, so on one hand, we've got that. On the other hand, we've got mistrust, or distrust for that matter. And that's really the fact that people don't trust banks and credit unions, maybe because of personal bad experiences, maybe because of anecdotal experiences from family members. If they're not from the United States, right, they might be from a country whose banking laws have been allowed for far more abuse of consumers, and so as a result, or mistreatment, right, and so as a result, people aren't willing to do that. And sometimes it's just, I don't understand how banks and credit unions work, right? People don't know why they get more money on interest. Where does that come from? How do banks make money? So there's a lot of things where people potentially aren't comfortable with it and ergo don't trust it. Some people look at the fees, costs, and services, right, and will look at them and feel like I can't afford this because, I'm going to get all these fees every month. I'm going to have these issues. But that's often because these are known losses, right, which is easy for us to start quantifying. We say, oh, well, I'm going to pay $15 a month in banking account fees as well as giving me access to bill pay services. But at the same time, they may not really be accurately thinking of how much they're spending on the alternative financial services. How much did they pay to just cash their check? How many transactions that they need with respect to money orders? So keeping track of all of that can sometimes help families to understand that. So those fees, those services can all be very confusing. People aren't sure what they mean, and right, the less familiar we are with something, the more complex it is. I know in my case, I get very try to shy away from it. A little uncertainty there. There's definitely some issues with cultural and language differences that exist depending upon where people might be from, depending upon what they learned about growing up. They might not be familiar with sort of what these things are. There can be very different mechanisms. Some cultures, for example, are very much against the form of interest, especially charging each other interest or being involved with interest payments. So certainly we want to keep that in mind. And then lastly, right, I want to go back to who we said the demographic group was for this, right? We've said that one of the most common groups that is in this survey. So this last point, right, really speaks to that. Accessing, getting there to branch locations, getting there for hours, right? Many of these families don't necessarily have broadband access at home, even though we think that they do, right? That may not simply be the case that they have a good connection at home that's reliable for this or comfortable with it. And at some point, to open a bank account, you do have to sign paperwork. You do have to go in there and show documentation. My wife and I have tried many times to say, we've already got an account. Can't we just do this over the phone? And no, we still need your signature. So that's challenging, right? I mean, I joke about it. I'm married with 2 kids, and we can't sometimes find time to go to a bank during banking hours for something as simple as signing a piece of paper. I can't imagine what it's like, right? If it's just me and I've got to get the kids to and from daycare and everything else like that, any of those after-school programs that might exist, 4-H, Cub Scouts and such, all possibilities there. So there's real logistic challenges for families. We also mentioned that not many of them were located in convenient places, right? And with respect to being on a bus route, being easily accessible, close by for communities, and also the hours of business. Most banks and credit unions, and I say most, but not all, are still open traditional bankers' hours, if you will, right? That 9 to 5 spot. And even then, many of the internal offices might close as early as 3 or 4 with only the card tellers open that late. So there are some barriers to people participating, and especially for people who might be new to that, just starting off, it can be a real barrier because it's not something that's familiar to them, and it's very much can be impersonal if you're doing that. So some of the reasons, right, then that people reported when they did this, we've talked about some of the traditional barriers. So what did people tell us, right? So number one, they don't have enough money. So this perceived belief, right, that I can't afford a bank in the first place, that banks aren't for me because I live paycheck to paycheck, or I do this or I do that. So there is a lot of that perception. Cost, right? So one is I don't have enough money, the banks don't want my business. The other is it costs too much to bank. Although in most simulations show that people will spend more in many cases on alternative financial services than bank accounts, but not always. They don't want an account. So that's what 1/4 of them are, of course, saying, right, unbanked within the last year and unbanked more than a year ago. So people just don't want an account. So what's interesting, right, was if they were unbanked within the last year, they don't have enough money, right, that went down a little bit. Cost went down a little bit if they were unbanked more than a year ago. And part of that is because as they start doing the alternative financial services, think about that for a moment, they will experience that the cost is not less at all. So that we certainly see some changes. Culture and comfort, right? That doesn't change too much over time. Convenience, they certainly are more convenient in many cases. They're going to be open later hours. They're going to be more marketing. If you've ever walked into a payday lender, for example, it looks like you're walking into a McDonald's. When you walk into a bank, it looks like you're walking into a bank. So it's, I mean, just the sheer friendly nature of the atmosphere, you can say, well, yeah, but they're charging you a lot of money, but they're really nice about it, right? And they're really down to earth in many cases about it. So that can make a difference, the comfort zone. You don't write enough checks, which is what a lot of people will say too, is it's not, again, there isn't enough there to generate this is cost effective for me. So if I really only had one bill to pay per month, it might be cheaper, for example, to simply use a money order than to actually have a checking account if you're being charged a fee, just depending upon how the dollars added up. So it can be the case that being unbanked is the right choice for a family. It doesn't mean there's not repercussions for it, but it doesn't mean that they were making the wrong decision always. And really just inadequate services. That's right, that's changed a lot. And where we see this is that one of the reasons why a lot of families use things like short duration loans and payday loans is because, right, that banks don't offer those. So only a few, and I mean a very few credit unions, for example, offer an equivalent to a payday loan, like a 2-week loan that doesn't require a big credit check and things like that to get there. But that's very experimental on the what we call traditional banking side. But yet, that in some cases, that's what people would need. Now, let me ask you this. What do you do if you need money, right? You don't have money on you and something breaks down in your car and you needed $200. What would you do? Right, so Taylor's telling me a few of you put in things like charging it, using a credit card, and that's exactly right. I mean, that's our mechanism for short duration financial needs if we don't actually have cash. And for many of us, I hope it's because, well, I'm going to get paid in a couple of days, I'm just going to pay that off, no big deal, really doesn't cost me anything to do that if I'm not carrying a balance. And so for some of us, right, that's where we are. But again, if you don't have a bank account, and if you don't have a bank account, shouldn't probably likely have any type of formal loans or credit cards either in many cases. So it's pretty hard, right, for you to access the same mechanisms we would use in those emergencies. So this notion of an emergency fund or emergency resource access, right, payday loans then start fulfilling that burden for many families. So when is 400% interest rational? Right? I mean, that's really kind of what we're saying here. So when does this make sense? Well, remember, people choose financial services, choose alternative financial services, I should say. I mean, look at Write Check versus the bank. Right? And I was joking about this before, but Write Check looks like a fast food place. It looks like a service place. It looks like somewhere you go, you get things done, they're there to work for you. The bank, well, honestly, they don't look that interested in it. So I'll throw it out there and say, but that's, again, we chose these pictures on purpose.
And what do they sell? How much does it cost? How do I know what services they have?
Right. So there's a lot less transparency in that. Even though the Write Check is probably charging a lot more for similar products or services, it's clear to someone. It's not really all that hidden. So traditional banks and credit unions can be a little intimidating, a little confusing, and let's be honest, when you make certain mistakes, can be downright punitive, right? If you bounce a check, you could be charged a fee from your bank. You might be charged a fee from the merchant too. So for one mistake for a $20 check, right, you can be being charged $40, $50 for that mistake. That's scary to some people, especially when they don't have the self-efficacy with respect to their ability to successfully manage their money and avoid bouncing a check. So, right, if you look at the financial services, much like McDonald's or Burger King, they seem to offer clear pricing. They seem, right, they're all up there. They look a little more casual. Everybody seems happy up there. There's garbage cans right at their feet to throw away the paper. Always nice, so you don't have to stuff it in your pocket. And, you know, right, they're providing solutions for people who are living paycheck to paycheck. As we said, If I went to a bank and said, I need a loan today, I've got to have money by tomorrow, the best thing they could do, right, if you really need that is, well, oh, we can let you apply for a credit card. But there aren't a lot of instantaneous solutions then because of underwriting processes and other things that have to be done. I'm not suggesting those things are wrong. I'm suggesting that those things create real barriers for families to participate in them as a result. And in many cases, even though in the long run they would be better off just grinning and bearing it, that short-term cost, that short-term impact on their time, on their budget, is enough to make them continue to kick the can down the road instead of trying to consider moving this forward. So let's say that someone's underbanked. Let's say that someone got unbanked. So when we talk about being unbanked for a moment, I want to mention that there's really two reasons why people are unbanked. You could probably a lot more, but let's put it into two broad categories. For any number of reasons, they have chosen not to have a bank account, right? They've chosen it. They're saying, I'm not opening one in the first place. So we can think of these people as never banked or unbanked, at least by choice. We're not saying that the choice is optimal. We're saying this is what they've decided for any number of reasons. Versus those who were what we call dissed, right? And we mean disbanked. So these are people that had a bank account and got into potentially anything from fraud to way too many bounced checks, way too much overdraft, way too much money owed for restitution, that the bank simply closes the account. And as a result, this person is disbanked, right? They're kicked out of the banking system. That means that they have reports heading on their check systems report, right? So remember, we said, what's a check systems report? All these bad transactions that might have occurred for someone are stored, just like your credit report. So if you get disbanked by one bank, the next bank you try and go open an account for sees the same information because it's a consumer data-driven report. They all use this to make their decisions. So if you get sort of disbanked by one bank, odds are most of the banks in your area are going to give you the same answer, right? So that's a problem because it means you really are, I won't use the phrase blackballed, right? But I mean, you really are kind of on the outs. And so there's systems in place. There's a lot of different mechanisms. I want to spend some time just briefly highlighting those for you so you all understand there's solutions that you can tell families about, not necessarily that you wouldn't be involved in directly as conducting these. We want to make sure you know that there's a lot of partners that can help families who are in second chance banking. So what's second chance banking? Well, this is really where financial institutions get that people make mistakes and under certain circumstances will give them a second chance account. These accounts might have lower fees. They might have a lot of limits put on them, so to sort of limit the amount of things people can do with them. But it's often done really with the guise that they're trying to give families a chance to start building back up a strong, a positive reputation and a relationship with a bank or credit union that allows them to come back into the mainstream banking services. These can involve deals made for restitution, not necessarily forgiveness in most cases, but at the very least a payment plan so that people are able to access their accounts and use them again. So, right, these banks will then allow people to start doing, potentially having more efficiency with their budgeting, but also as a result that should they get some extra funds from a budgeting process, have a mechanism now to save money for the future, might even be able to, with responsible account management, build credit back up and be able to utilize credit someday to make some good strategic decisions. Things like getting a home, maybe getting a small business loan, or any number of possibilities there. So working with banks, as we know, provides things like asset building, credit building, secure savings, convenient ways to pay our bills, and really much more favorable rates on loans that we might need for different types of transactions. So one such program, I'll highlight two briefly that you should know about. One is called Fresh Start Florida. This is a program that's offered through Cooperative Extension as well as some of our partners. So any of your local county offices are probably at least have access to this program. They may or may not all be doing it today, but it's something they all can access. And Taylor, who's sitting here with me, is pretty familiar with that program among with our others. So that program focuses on learning, banking, budgeting, credit management, and provides a few other things. And Taylor wanted to comment on that real quick, please.
Yeah, if any of you are located in the Jacksonville kind of metro area, Duval County has a very strong in-person program offered by the Family and Consumer Sciences agent there, Catherine Marin. She offers evening classes, Saturday classes, and you go through sort of those basics. You go through how to manage an account, how to set a budget, how to plan for periodic expenses, She walks you through how to get your check systems report, how to clear up any issues on there, especially certain bank codes will flag things as fraud, even if they aren't. Those ones are very tricky. So she's an expert at helping consumers really clear those things up to get a certificate that they can take into several credit unions and banks in the Jacksonville area, including ViStar, which has a pretty big footprint across Florida, to be able to get those second chance accounts. So Cooperative Extension, it's on McDuff out there in Jacksonville and offers in-person classes. I've co-taught some of those, and we had participants from Orlando and across, some people who came from the Panhandle to attend those. So if you do have any clients who are looking for an in-person experience, Catherine's a great resource, and she's bilingual. She speaks Spanish. She's able to help people really understand how to kind of rectify those mistakes they've made in the past to start again. So we'll talk a little bit more about how to find extension resources, but especially anybody who's located up near Jacksonville, that's an excellent option.
Thank you very much, Taylor. So again, we wanted to mention about that, and with any of these programs, the curriculum that are out there, note that there's none that are universally accepted by every bank or credit union, that it's always done sort of on a local grassroots level for the most part. So these programs are available, and certainly if it's something that you think your community needs, we'd encourage you to reach out to us and see if it's some way we can help you out. We're also partnered and work with the Bank On movement in Florida as well. There's Bank On Florida. And this is where a lot of banks and credit unions are also participating at providing second chance accounts. There might be different programs and curricula. Again, Fresh Start Florida is one of the programs you might see at some of these participating counties. So if you're not familiar with Bank On, again, it's a place you can make sure consumers know about it, or you can refer them to Cooperative Extension, and we can refer them to any and all of those programs. We're happy to do so. But we wanted to make sure you were aware of that and know that that's a coalition of numerous nonprofits and banks and credit unions working together. So just on a few last points here then, just to talk about ways in which, again, thinking about sort of within everyone's mandates, the things that they're doing on their jobs, we wanted to make sure too that while it's important to understand the challenges that families are facing, it's important to know that there are mechanisms to help them to change sort of their situation, that they don't have, this doesn't have to be a pattern that they live with forever, but it often does take some assistance. So there's lots, Extension's a great example, but lots of nonprofits out there, but I'll certainly highlight Extension. Work with evidence-based, research-based programs that are available for families that might be in your community. So if you have a group of families that need this or you think should benefit, let us know. We'll get some flyers together for them. We also have in many of our counties, we have about 40 counties at least, have trained volunteers. These are called Florida Master Money Mentor Volunteers. So we're available with volunteers, or we're happy to train some of your volunteers if you all work with some as well, or some of yourselves for that matter as Master Money Mentors. And these are really to help families who might need one-on-one education, mentoring, or even working with small groups, but really just provides an opportunity for families who really need to make some changes within the space that we've been talking about today, but really would need some assistance in doing that. And so this is different than a financial advisor or a money manager. They're not going to do anything for people. They're mentors. They are meant to mentor. They're meant to coach, to really help people kind of to learn about how to do these processes for themselves and to be a sounding board for them. So we are happy to, again, try and connect everybody to those programs and resources, because I think that that's a large part of what people need. Is I always say we don't need to create a bunch of new materials and resources out there for families, but the truth is what many families need are simply to be connected to the ones that work. So we wanted to make sure that you were today spent some time learning a little bit about sort of the scope of what unbanked and underbanked is all about, what it looks like in Florida, and then very importantly, what are some ways in which, if you're encountering families that are struggling with this, what's an appropriate response? And we would like to think that hopefully you'll think of us in partnership or make partners with other local providers in your area who might be able to help with second chance programs. So I'm going to close up shop for now. I know some of you might have some questions. I think Taylor's standing by and taking a look at that. If you want to learn more about any of the programs we've mentioned in Extension today, You can shoot me an email. My email information is listed there, or you can reach out to me on Twitter. You'll either hear back from me or probably Taylor in a short order if you can reach out to us. So we're more than happy to kind of work with you, answer some questions, or even just play matchmaker and help you connect to people who might be in your geographic area. So let me pause here and I'll open it up for any questions. So I wanted to, just to maybe inspire some more questions, and since I still have a few minutes, I wanted to mention too, many of you might be familiar in your local areas with VITA programs. Those are free income tax assistance programs that target limited resource families, those eligible for the earned income tax credit. This is a great opportunity too to, number one, this is a lot of the same audiences we've been talking about today in terms of who uses VITA as well as who uses alternative financial services. So we would encourage, number one, to make sure that families you're working with know about VITA as a great way to get plugged in, take advantage of a free service, unbiased, responsible, that sort of thing. But also, you know, again, as a way too that at our VITA sites, we'd be happy to make sure that families know about some of the resources and opportunities available from you all too. So we'd encourage you to reach out, and again, reach out to me or Taylor, and we can let you know about what specific programs might be available in your county. You can also check out some of our counties have populated a FIN, Florida Information Network, which is fin.ifas.ufl.edu, and I'll put that in the chat window. And that's an emerging website we've done in conjunction with 211. So there'll be information from 211's 211's databases across the state, as well as information about extension programs in 2 searchable databases. So I wanted to make sure that you all knew about that. And I seem to only be able to, I think I can only message, oh, that's what it is. I can't message everybody. So I'm messaging the organizers, and hopefully they can pass this on to everybody else.
I can pass along anything. Dr. Gutter, if you expand maybe the questions box on the control panel, you should be able to see it since you're a presenter, hopefully. Maybe.
Yeah, I'm not. I was going to say it's strange because in my two box for chatting, I can only send messages to you all. But I don't even see the attendees.
That's strange.
Which is unusual.
So
yeah.
this financial.
I only see the couple of us listed, but it's been okay because I've got Taylor here who's looking at everything else.
You just posted that financial.ifas.ufl.edu. And what was that for?
Mm-hmm. Sure. So this is called the Florida Information Network. And so it's one-stop shopping for people to find out all of the programs that are available or listed in 211's databases, for those of you familiar with 211 referral services. It also has a listing of a lot of the IFAS extension programs that are out there, things like the Money Mentor and the VITA programs. So some of the things we've talked about, this is a real easy way to try and connect with it in your county. It's not fully updated with all information yet, so if you get to your county and the stuff that you're looking for isn't there, that's when you can just email Taylor or I, and we will be more than happy to connect you with those things and let you know about what's happening in that county.
So if your county IFAS office does not offer, or currently does not, is not doing one of the programs you're interested in, is it okay for you to go across county lines and go visit a different out of your county?
Without question, it's okay. Not only is it okay, we encourage it. We certainly try to. I mean, the county lines are there because of administrations and such like that. But the truth is I mean, some of our agents work across county lines already in most cases. There's a lot of teamwork and collaboration for best practices. So yeah, we would never worry about that. We would say go with what's convenient for you. And we would say in any case it should be high quality no matter who the presenter is in which county.
And there was a question through the chat about getting checking accounts or getting bank accounts without a social security number. And so I answered, I think Nicole will have to forward it on to you, but the CFPB, the Consumer Financial Protection Bureau, is an excellent resource for questions like this. They're the new federal agency that came under Dodd-Frank and is really truly a consumer protection bureau. They are here to make sure that consumers' rights aren't being violated. They filed a couple of class action, big lawsuits against some of the abuses that have been happening in alternative financial services, and they have a great kind of frequently asked questions option. And so I posted the answer that they just responded to here in November that says you are not required to have a social security number to open a checking or savings account. Many banks will accept a taxpayer identification number. So if you have that from the IRS, some banks and credit unions accept other forms from foreign citizens. So I don't have a list of specific banks, all across the state of Florida, but this can kind of give you that ammunition to maybe, on behalf of your clients, your adult learners, to do some of that research for them in your local area and kind of build up that knowledge. So you're able to refer them somewhere that's going to be friendly and less intimidating. But yes, you do not need a social security number to open a checking or savings account.
So I've got a question for you while we wait for anybody else. If earlier in the presentation you mentioned that a lot of overdraft fees just kind of build up in your account, and if you do get a direct deposit, paycheck, or anything in there, it just goes toward paying off those fees. Is there a day where banks kind of give up on you and they can just close the account and send you over to some sort of collections agency, or does that bank account just kind of remain open and a black hole forever?
That's a great question. Definitely that happens. Without question, banks will at some point, some will do charge-offs with it. Some will certainly send you to collections, and that can, as we know, not only is someone in the red, but now their credit is being devastated while they're in collections, right? So each and every day that's late is hurting their credit score even more. So it can be quite, we used the phrase punitive earlier, and that's really a good way to describe it because, I mean, it is very much a punitive action and as a result of things where someone, is spending maybe 6 months or a year really kind of dealing with the accumulation of those fees. Can really be crippling, if you will, to someone's ability to make progress.
And there aren't any limits on those overdrafts. I mean, you could have a $35 overdraft fee, and if you went to the gas station, the grocery store, paid a bill, if you had a couple hits on the same day, you could have easily $150 worth of fees from really, 1 day late in a check hitting your account or a paycheck depositing or something like that. So they really can add up. Those areas, I've heard that the banks and credit unions are more likely to forgive their own fees than you actually overspending. So if you charged, $150 at the grocery store and you only had $50 in your account, that $100 that you overspent, well, they're not going to forgive that as easily as $100 of their own fees that they, applied to you.
Right.
So there's a little bit, they have more discretion in the fees that they leverage than the actual overdrafted balance that you spent.
Great. Okay, we have a question from one of the participants. I'll just read it to you. Can you clarify again how you obtain your check system report?
Oh, absolutely. And Taylor can put the link in there, but it's so check systems, credit reports, and clue reports are all covered under the FCRA, the Fair Credit Reporting Act. So you are required to be given access to that report. All three of those reports, consumers have the right to access. So Taylor's going to put the link in there for you guys right into the chat box, so you should see that in just a minute. But it's just a simple thing. You request the report, take a look at it. Essentially what you're looking for are, negative marks. There'll be different indicator codes for something that may be wrong. What we always say is just like with your credit report, if something is on there that's erroneous, you have the responsibility to and the right to see to it that it is corrected. right? I mean, if you, again, nobody will fix things for you. Just like your credit report, nobody's actually looking to fix your credit for you. But if you identify something that's erroneous, you certainly have the right and, and the ability to prove it in most cases that it was not you that did that. So we really want to make sure that people have that level of awareness for it.
And there's one annoying thing, if you are familiar with the annualcreditreport.com website, you know that it's pretty much instant, that you're able to go online and get your Experian, Equifax, or TransUnion score, all at once. You can get all 3 reports online. Very convenient. The Check Systems report is less convenient. Sent 2 links to Nicole there, and the second one is the actual request for your report, and you're waiting for it to get mailed. It's very annoying. You have to put in all that personal information. This one will ask for a social security number, your U.S. social security number, to be able to get this. So if you've been denied an account and you don't have a social security number, I would go to the CFPB to get a little bit more assistance there. They have a consumer help kind of function, but this one you have to wait for it to get mailed. So they say it takes about 5 business days to get it mailed. So if you have someone who is going through like a second chance banking and you're having them register, send them this link or go through this process before the class. I would give at least a week before the class so that they can actually see, okay, here are the accounts, here's how much is owed before they go into that process. And yeah, it takes a little bit longer. It's not the instant online report the way credit unions offer, or your credit report offers.
Okay, so just to follow up to that, so what is the difference between those 3 reports you just kind of mentioned?
Sure. So the credit report, right? I mean, everyone's kind of familiar with that. That's really monitoring people that you're doing lending business with, right? So primarily people that you engage in contracts with. So if you think of car loans, student loans, mortgages, credit cards, and different people will report to your credit agency even when they're not lenders. So for example, your utilities companies won't report that you're paying your bill most of the time, but if you get into collections with your utility company, that will be on your credit report too. So it's really people that you've done contract work with in some capacity, whether it was a loan or someone you've committed funds to. So that's what's going to be on your credit report. Now your clue report, right, I'll do that one second because we just hinted on that, is for insurance companies. So they're monitoring, so think of your homeowner's insurance or auto insurance. How frequently have you filed a claim? What was the claim about? Did you actually request reimbursement or did you just inform them of a loss? Right, so those things happen in your clue report as a result of it. And then your last report we mentioned was check systems, and they're monitoring specifically your transaction account history. So they're only really focused on your checking account itself. So, are you overdrafting your account? Are you paying, is everything sort of happening as it should from a management standpoint, or have you done some things, right? And so each of those reports, we call it your consumer breadcrumbs, right? So we leave data all over the place, right? And we're not even talking about Google or Facebook. We just mean banking. So we leave a lot of data footprints. And so people make a living off of mining that data for others, right, and sharing that information. So, and they've, right, so those 3 reports, consumers can all access them. The clue report isn't that meaningful unless you're getting denied for insurance claims or things like that. You can certainly look to it. So unless you're having insurance issues, there isn't a lot to be gleaned from the clue report.
But I've heard a lot about this. This is an area that sometimes consumers will have to turn to in instances of fraud. Mm-hmm. So if you've been a victim of identity theft, this is one of the ones that we recommend consumers pull because, yeah, if someone opened an insurance policy in your name, you wouldn't necessarily know it until they filed a claim. And so this is a good place to look to see any of that activity beyond just spending on a credit card or taking out loans or anything like that. So it's kind of like check systems where if you've never bounced a check or had an overdraft, you don't know that it exists. You've never had an issue with it. It's only when you have a problem that you need to turn to them because you really do want to have all of that information to clean it up.
And then just one last point on those reports, and I'll stop talking about them because obviously I could talk all day about these alone. They influence each other. So for example, to actually open a banking account, most commercial banks not only pull your check systems report, but they pull your credit report too. So same thing, your insurance score, what actually affects what you pay for insurance and whether or not you're paid, includes information from your clue report as well as your credit report, right? So this data is often combined now to talk about things like financial responsibility mixed with actual risk of the incident occurring. So it gets to be really complicated, and so we can say the more consumers are sort of on the outside of this data, maybe they escape some of the marketing and junk mail, but at the same time, they're also missing out on those opportunities that are trying to improve people's efficiencies with respect to their finances. So they're, like we've said all along, being unbanked is a reality. There's an enormous amount of Floridians that are facing it, and the truth is that some are choosing it wisely, but many of whom are not choosing it at all. It's being chosen for them, and so we're really trying to identify what are the best ways to help them. And a lot of that is making sure that they know about the resources that are there to help them through that transition.
So if you've got time, Dr. Gutter, I know you're busy. Do you have time to answer one more question?
I can take one more question, sure.
Okay, so do potential employers also have access to these 3 different reports that we just recently talked about?
So many employers can request them, right? I mean, if you've ever had an employer request your credit report, that's part of your application process, right? You sign off that they're allowed to do this. I've not seen many employers, for example, I've not ever heard, doesn't mean it's not happening, but I've never heard of employers requesting clue reports, for number one. And I've not actually heard of any employers ever requesting a check systems report. Now, I can see in both of those cases, if you are working in those industries, employers might be far more interested in it. But what is common is the credit report. So many employers pull credit reports, and partly because it's simply more known, more widely used. People get it more with respect to what's on it. And it's a different measure of financial responsibility, right, is what people often call it. They refer to it as a credit worthiness score, right, or a credit risk score.
And if any of you are working with service members, this is an area in the past couple of years, some of our agents who work near military installations have had an uptick in, seemingly responsible service members who are attending financial education classes because they've been denied security clearance. Because of issues on their credit report, they haven't been given promotions or the next level of security clearance because they're seen as a risk for bribes, and it's sort of another reflection of this responsibility that hurts their career. So I don't know if anyone in this group is working with active duty service members, but I know that this is kind of an emerging issue in that population.
That's right.
And then I added one more thing in the chat that Nicole shared. Dr. Gutter mentioned some of these reports and some of those pre-screened offers. I hate these. I was getting these like crazy once I got my first credit card. So if you go to the opt-out pre-screen website, you can very easily opt out for 5 years. If you'd like to opt out longer, permanently, you just have to mail in the form instead of going online. And this won't prevent you from searching, if you would like to get a new credit card or you would like to change insurance and shop around. It doesn't freeze your credit at all. It just stops all that annoying junk mail. So I find this really useful for some people, that temptation. If there's a new card offer, maybe they think about a balance transfer, or are less committed to maybe paying down debt. And it's just a lot of paper to get in the mail. So optoutprescreen.com, I put the link there as well.
Great, and like I mentioned, just in case anyone didn't see the question box, I will send out a follow-up email to this webinar with all these links that we've talked about and shared. I know some of you have had issues being able to copy and paste the link right now, and I don't want anybody to miss out on the resources. So it will be available to everyone.
Thanks, Nicole.
Absolutely. Great. Yeah, and if people have any follow-up questions, please don't hesitate to share our information. We'll be glad to, revisit this or help people make some good connections.
It's great. Okay, well, I think we're over time. Well, obviously we're over time now, so we're going to let you go, and thank you everyone for participating and asking great questions, and thank you for all the great information, Dr. Gutter and Taylor. It's great to have you.
Thanks so much. Happy to be here. Thanks a lot.